Guys, it's Will. Hopefully you're having a great day today. In this video, we're going to be going over the top space tech companies to watch right now, along with some AI companies as well. Let's jump into it. So there has been some really great moves we've been able to play into in space tech. Black Sky was one that's a 66% swing we were able to catch. I'm going to talk a little bit about it. We're going to jump in. And also, just a friendly reminder, all the companies we like to cover here on the channel, there's no one stock necessarily that is like a big break that I'm going to tell you, buy this and you'll be a millionaire tomorrow. There's nothing like that you'll ever see on the channel. And the reason I want to clarify that is because some people think because I say that, we're not going to focus on smaller cap. We will be covering some smaller cap companies as well. It just means there's more risk involved with those smaller companies, which is something you got to consider. Given that there's higher reward, there's still going to be high risk as well. So we're just going to start the video with that because there's been some questions I've gotten recently about, hey, Will, where are the smaller cap companies? And can you share some of those plays that you're looking at? And absolutely, I would love to share them with you. So we got ASTS. The ticker symbol is one we're watching here. I'm going to pull up the live chat so I can make sure I can see you all and hear you all, or not hear you, but hopefully you guys can see and hear me okay as we're live. And we're going to jump into some space tech companies. Now, space tech is a lot different right now than it was a couple years ago. A couple years ago, it was very uncertain around the profit potential. It was very not clear whether or not companies were going to be able to continue to grow. There was a lot of uncertainty around space tech. But now we are in an era where space tech is growing fast. And now we're going to be jumping into some of those companies and seeing some of the financials even starting to look more favorable. So let's start with ASTS and we'll take a look. Dennis says Redwire. Take a look at them. I would love to as well. I have a pass actually near when I got to meet Redwire, when I got to meet some of these companies, AST as well. And one thing that I noticed is this is the funniest stock to me, ASTS, because it was 2022 in September, somewhere in here, where I was investing in this company and looking for a swing up into like $5-10 a share when it was at like under $4 a share, because my friend who currently works at Rocket Lab was working with AST and said this company is going to unveil this new tech that allows them to connect with cellular devices from space. So when you look at they got these 5G cellular broadbands, they've been launching these satellites and they have these like technology mechanical setups in the satellites that can expand the satellites like this and actually provide internets down on Earth. So really, really interesting, right? And it's so funny because I had these calls for like $5. They ended up expiring worthless. Now, I do have some long-term holds in AST from a year or two ago. Not nearly as much as I would have liked, but definitely an amazing run that we've seen with AST. It's actually made this run in 2024 up into $39 a share, sold down to about $18, and then into 2025 by about July, end of June. Here we see it surge to $54 before correcting. Now, at this moment, it looks very much overbought. It looks very overextended. But when we're looking at the three things, which is the market, the growth, and I see Johnny says, love it. There's some stock mates in the chat. Yeah, I do see some stock mates here. That's the best. I'm excited to see you all. And Johnny says, means we're looking for a pullback. Yep. So we do see a pullback here on AST slightly, but not anything that's significant. So the market is growing. That's the first thing. We have a growing space market. Number two, looking at the analysis, and actually, before we get to the analysis, in the market, I've seen real world usage. I know this company is legit. I know the companies it works with because I've had that exposure with my friend that works with these companies as a developer for space tech. So I know that they are real. Then we get into the analysis. When it comes to the analysis, we could look at the recent financials, you can see they got a $15 billion market cap. They've added 100 million of liquidity from non-dilutive equipment financing. You can see there's a lot of hype articles coming out recently, which is to be expected. And from an income statement perspective, I'd say they're less favorable than other space companies. They got net incomes in the seriously negative, about 30 to 50 billion dollar or million dollars on average, quarter over quarter financials. When we look at their balance sheet, they do look better. As you can see, they're improving their assets. They're still in this building phase, so they're growing their assets and growing their balance sheet consistently. Year over year, it looks pretty good. So it's good from a balance sheet perspective, not so good from an income statement perspective. So the financials are okay. From a development perspective, they have a lot of employees, around 570. They are in a market that's growing and most likely is going to see competition with SpaceX, which is a massive industry. If we look at some of their partnerships, they got some strategic partners for sure. So I believe it was like T-Mobile, they got Verizon, they got AT&T already lined up, Vodafone, Rakuten, they got American Tower, Bell for Canada. So why is that important? Well, essentially, they're focusing not on just satellite internet, they're focusing on satellite internet that's good enough for reaching cellular devices. So with their space-based low latency broadband architecture, it can go direct to link unmodified mobile phones and other cellular devices. So they stand to really be on the front runner of some of the developments in competition with SpaceX, but not to a Wi-Fi router, but to a mobile phone. And Neil says, hey, what's up? I'm tuning in from Atlanta. Hey, Neil, happy to have you here. I see some comments here on SoundHound to take a look from some of the comments there. And FLNC would be more than happy to take a look there. So AST here, they see more contracts. They just joined the large cap Russell 1000. They are in a lot of growth with different sectors. You see them kind of build the AT&T and Verizon. They also have a $43 million contract with the U.S. Space Development Agency here, which is most likely going to hit their balance sheet. So there's a few service agreements that they have here. That's a Vodafone one there that they just signed. So the contracts roll in. The financials maybe improve in the income statement. And yeah, the market opportunity is pretty big. Now, when we get into the analysis of the chart, they do look overbought at the moment. I think it would make a lot of sense to see them sell down at the very least to this previous resistance here at about $38 or $40 a share. They're trying to hold above that 200-day or that EMA right now, which is possible they hold it. But if we kind of drop it down to the 4-hour, we look at it, it would make sense that they sell back down into this range here. I think they're a little overextended. It's possible that they continue up, but the volatility is huge in space tech, especially when the income statements maybe haven't shined through. So how many of you guys are looking at ASTS and saying, well, this is actually a 5-10 year play that could make a lot of sense? How many of you guys don't touch it because the financials on the income statement haven't jumped in? That's what I would be asking myself on the play for the shorter term or things like that. As I mentioned, just to disclose, I do have some long-term holds in AST, but I did have a lot better entry than now because it was around 2022 when I started noticing it with my good friend Benjamin, who works at Rocket Lab. And so, now that it's up to these levels, I would imagine a pullback could make sense. But yeah, 5-10 years from now, I think it would make a lot of sense to see AST as a top company in cellulars. It's funny because, we were just making a video yesterday in tech around a 5G company. And we were talking about, I think it was called Ceragon, which is CRNT. we were talking about it and how it was kind of oversold and there was this potential. And people are saying, "Will 5G, it's good, but we're about to see satellites be the next big thing." I thought, that makes a lot of sense. I mean, that's why you got AST. That's why you got Starlink partnering with T-Mobile. Like, yeah, 5G is big, but you're right. When you look at AST and you look at their offering space 5G cellular broadband, hey, that's kind of a big deal. So I would imagine that that could be kind of the direction that we see some of the internet go, and that's something to consider. So from a space tech perspective, we'll be watching it closely. Definitely have some other space tech companies to take a look at. I do have some recommendations here. Dennis says, take a look at Redwire. Redwire is a company that's I've been covering for a while here. Looks like we had this previous support and resistance, and they were consolidating between these levels. We kind of see them bounce here on this support level. They're kind of targeting this next range here in this trend, getting up into this level. It's about a 20% increase up into that $19 range, Redwire. Now, actually, I've covered it a lot. I was able to meet a bunch of executives at the company when we went to that sponsored event, the SpaceX event, sponsored event, the Space Symposium in Colorado Springs. And so essentially what they focus on, Redwire, they have defense, they have manufacturing on Moon and Mars. That's pretty cool. I really like their website. They have sensors that monitor space weather for satellites. They have solar arrays that they put out. There are multiple approaches they have in their system. A lot of it comes from space defense. And, you kind of talk about it. Like, I was just thinking about it the other day, really weird, but I had this dream that like this huge meteorite hit Earth, super crazy. And at first I was like, oh my God, we're going to die. And then like 2 seconds later, I was like, hey, we lived a good life. It's great. It's what it is. And it's funny because this company seems to be like working towards technology that if there's, let's say, a large meteorite or something, we would be able to potentially solve that and blow it up before it hits Earth. I feel like that would be kind of epic. And then when it comes to their newsroom, so again, looking at their chart, we do see that sell down. We do see them have an overall uptrend that they recently kind of broke a little bit here, but now they're dragging it out, which is totally okay. Kind of dragging it out here. And maybe this is kind of the new trend that we're looking at there for Redwire. And we're saying, hey, this 20% swing up into this $19 range could make a lot of sense. And you might say, well, what's the financials? What's the news? We'll take a look. And then they have this 50% potential for profit up into this $22 range. And that's kind of what we'd want to watch. At least I'm going to be watching here in this next week. So when you take a look at Redwire's movement, we know they've secured a lot of contracts, and they got NASA contracts here for cutting edge manufacturing, for building infrastructure on the moon and on Mars. They also have some new contracts. There was one that they were able to secure that was part of a greater, like over $1 billion deal. And I was there for it. At the Space Symposium, I was there actually when they announced this. And it's a $2.6 billion NASA contract through 2028. And Redwire became one of the 14 prime contractors on the CLPS IDIQ contract, which puts them in a really unique position to potentially increase their revenue and also increase the amount of service they're providing in space. So I think they have a lot of potential there. So that's something we covered recently. When we look at the financials, this is actually why that contract's so important. They're a lot smaller market cap than some of the other space tech companies at $2.2 billion. Their quarterly revenues, though, are a lot more favorable than, for example, AST we were just looking at. See how AST maybe cracks $1 million in revenue, but mostly negative net income, Well, when we look at Redwire, they have this positive revenue of around 80 million. Declined a little bit there into March, but they did just sign that new iSpace contract we mentioned a second ago, which could put their revenues back up. And you do see increasing revenues year over year, with net income there just a tad bit negative, but the balance sheet also looking good. That's actually interesting. So they did see a reduction in their liabilities into 2025. They reduced their liabilities, which is good because it was getting a little shaky there in December when their liabilities were much greater than that of their assets. So they were able to decrease the liabilities, and that's pretty good as well. So Johnny said something cool. He says BlackRock and Vanguard own a ton of shares and they're gaining momentum. Yeah, actually, I'm not too sure about that. Let's take a look. Let's take a look here. I think you're right. I think we've gone over that before. Let's take a look. Increased positions is much greater. So you can see indicator is that there's more increased positions. And you got BlackRock there. Johnny, you nailed it. Johnny, I got to send you a cup, dude. Did you notice how we had this going out inside of Stockmates where we were doing a little while ago? I announced that the top 3 members gets, oh, I don't know if I could find it, this cup that has like a trading plan on it. And I made a video and I was like, the top 3 was like Lawrence, David, and Lance, or yeah, I think it was you guys. And I was like, but Johnny was just creeped into the top 3. So I was like, all right, I'm gonna send you that, dude. So get ready for a cup. It has a trading plan on it with like a nice like plan to follow on the right. So anyway, I wanted to let you know inside of StockMate, just look for that, man. Sick. Okay. So when it comes to exactly what Johnny just said, so you know, I'd say this all the time, but so much of the value that comes from finding companies that are solid, not necessarily the big break, this is finally the one that's going to make me rich type of opportunities. That's not really what we cover, but the ones that's like, hey, this makes sense. Financials make sense. The potential for this to reach these levels makes sense, or what have you. That's where we look at this. We could see they also, from the financial perspective, looked good. From the level of which they're getting institutional investments, also seeing more increased positions than decreased positions, which is a good sign of growth. So you see them shoot BlackRock at 1.7 million shares. You got State Street as well. And then again, when I was able to meet them firsthand, so I actually literally was at I didn't like drink because I normally don't, really depends on the occasion, but it almost felt a little odd because I was just like there to learn, but it was actually kind of cool. They had like a happy hour at the Redwire event that I went to in Colorado Springs when I was at that space symposium here. And they announced this contract that had that potential for multi-billion-dollar growth. And when they announced that contract, they still hadn't seen like big growth on the quarterlies. And this is what we're looking at. The quarterlies have looked fairly good. The balance sheet, they did just reduce some of that debt in the last quarter. And we're looking at them to be one of the top players in satellite tech as they continue to build out some of their contracts and getting that NASA approval on the manufacturing for infrastructure on the moon. So very cool, very good stuff. That's what we're going to be watching there. And so from a technical perspective, when we see them continue to validate this rising support, why we would potentially look for an investment in them for this 46% swing, which I'm very grateful. Guys, we already caught what are those once in a year opportunities. Like we got the Black Sky one at 66% gain, BBAI. That's, and then our long-term in BBAI is what's going good. I mean, Quantum, we started covering it before it blew up. It's been a really good year, right? But Redwire here is one that if we manage risk properly, like I don't want to bet the farm on it, and also we want to manage risk because it is still smaller market cap at 2 billion, so there's risk. But let's say it continues this trend, we see it push up above this 200-day moving average. If it does continue to make that move, we're looking at next resistance level up here around 1750, but then next resistance and this consolidation around $18. And then if it can break above those levels, we're talking about that potential for that swing of not 15 to 20%, but potentially, that 40% swing in the continuation of their trend. So that's something that I'll be watching closely for sure, because of all the things that we just went over kind of lining up. But also when they start to make that move, we know they move quick. You can see like that EMA when they break above and bounce on a 200-day moving average in that last run up to $22, which was, let's see what that was. That was a 60% increase. Why we watch closely around these moments is because if we start to see that push up into the EMA holding above those levels, and then it's bullish, that blue line oftentimes acts as a support, so good indication. And a bear market acts as a resistance. Now, it's in a nice spot. If we see it push up and continue to push up, then that's what we'll look for. Cool. All right, so I see Moheen says, Will, do you see a market crash and crypto being collateral? Crypto being to soften the crash? I mean, I think that the general consensus is always going to be that like a lot of people, and this is what most people think, that stocks are just way overvalued. But the reality, and this is kind of how I view it, is how much value really is being created, like a massive, unprecedented amount of value. Moheen then goes on to say, I'm holding on to AMD. Like AMD is probably in this phone I'm holding. It's in the Starlink satellites above. It's powering what is housing a lot of the information on the live stream that we're doing right now. I think like a lot of people miss the fact that companies create value. You know what I mean? Like, so we had a big pullback in the beginning of the year, huge pullback, one of the biggest we've had in a very, very long time. We see a correction. It's part of the market. It could happen, of course, but when it comes down to the value that the market continues to see, it's part of the reality that people don't realize is that, yeah, the companies look overvalued, but they've also become a lot more valuable because of the value that they provide. Moheen says, corporations will run the world, I suppose. I don't believe so. I believe the people that run the world are the people that get up and go after what they want and make progress towards things for themselves, but also in a way that will make them powerful, and that's going to come by serving others. And the companies that serve the best are going to be the most successful. If they aren't serving the best, they are not going to be successful. It's a law. It's a law of nature. I believe that's how the world works. And anytime that you feel like you're not making enough, or you're not getting enough money, or something's not working out for you, and you wish your situation was better, it's probably because you have to become better, or you have to serve more people, or you have to help more people and create more value. And that's why you're not receiving value. I had this thought the other day. There was like this homeless man I was talking to, and we have a Give account. So really funny story, because we were just going through some stuff that we were selling on Facebook. There's this jar here. It's got the words long-term on it. So every time my wife and I used to get any money at all, we would have these different jars. This is a tiny little jar. See how it says long-term? It's from years ago that we found it, and she kept it as a souvenir. And we had like 15% long-term, 40% financials, or necessities, or what have you. And we would stuff these with our money, and we would like we would slowly build and manage our money better because we thought this is how we're going to get rich, is we're going to learn how to be better managing our money or whatever. And it worked. Not only did it work, but now we have to automate our money into our accounts, and we do it digitally now, of course. But what was funny is, there's certain things that you learn, and it's not about who you know or that a certain person has something over you. I think it's more about what you know and how you're able to apply it. So if you know the simple law that if you create value, you will receive value, and that every person is paid in direct proportion to the amount of value that they bring, then what you'll learn is that, for example, if you were homeless and you were outside and you didn't have something that was totally uncontrollably a situation that would impact you, that you had no control over, on unforeseen circumstance, then sure, yeah, of course. But when it comes to let's say your mind's fairly okay and you have decisions that you make, for example, if you're sitting outside, you help people with the door, and you help people with the napkins and throwing away their stuff or throwing away the things for their food after, and then you ask them for a tip. It's you'll probably get tips, and then you won't be homeless for that long. It's the service side of things, I think, is such a overlooked thing. And I live my philosophy based on that success is service, and that people think that success is money, but in reality, that's like saying, give me fire and I'll put the wood. Whereas success is actually the progress and the service of bringing value, and then you receive value back. And there's this really good quote that says, help enough people get what they want, and you can have everything in your life that you want. And I believe that to be true. And so, I don't have any desire to change your mind. But if you say that, the world's run by corporations, I do think it's a pretty dire way to look at it. I think that they're serving, and, you can serve as well. Just got to figure it out, man. Hopefully that's helpful. We ranted a little bit. All right, so the next one we got here is Marty says, the high dollar companies create service that I use every single day. Love that. A lot of stocks here because of the BBB. Don't forget drone companies, UMAC, ARCAT, KTOS. Yeah, that's nice. Let's take a look. So as far as space tech, we got to cover some really good ones. I see Harry says, buy Rigetti. We could transition from space tech into aviation tech. But before we do, there was one comment, I think, from someone. There was one of, we'll get into aviation, but for example, AMD stock, kind of did a full breakdown. You guys probably saw it yesterday if you were tuned in, but AMD absolutely in this rally that continues to recover. And they're kind of in space tech a little bit. Did you know they provide the microchips for Starlink? And they are starting to recover big time. So we see them recover up into these levels. The next target I have for AMD is actually in that $229 range. They could be due for a pullback as low as that 135, or if we see greater market pullbacks down to that 128. But for the most part, what we're targeting here with AMD, you got a resistance at 163. So that's kind of the next level to watch. And from here to 163, we're looking at about a 17% potential increase here, or a 34% increase on AMDL. And then to previous highs, about a 67 or 70% increase there on AMD. And so financials look good. They were doubling revenue. So that's a good one. That's why we had it on the list. And from a PE ratio, people tell me, well, but the PE ratio, but they're already $100 or $200 billion company or what have you. And I totally get that. What are they, 223, and the PE ratio is high? I get that. But when you look at the high valuation, you also have to look at the amazing level at which they continue to grow their revenues here, and the amazing way that they continue to keep net income growing. Their balance sheet, total assets increasing with total liabilities even shrinking. I mean, those are things that you don't get to see quite often. And they are powering data centers. They're powering Starlinks. They're really, I think, even though, yeah, the PE ratio is high, I would imagine we could see them continue to grow and become a top player. So that's why I say that. It is one of the more, higher valuation, but I'm talking about service of the marketplace. It seems like they're in a favorable position. Steven says, "Will Deepak rich?" Haha. My wife is reading that book right now from Deepak Chopra, and she was telling me about it the other day, and I was like, that was deep. She told me some. You want to talk to her about some deep stuff, man. She was talking about like how the stars, how we're made up of the stars. It went deep, man. It was great though. I loved it. Okay, so let's transition into aviation tech from space tech. You got ARCAT. So ARCAT's one we have covered. We kind of talked about the recoveries, but the manipulation they faced earlier was why we don't cover them too much. They saw a surge up to about $15 a share, and then they sold back down here to this $4.60 range. Now, when they sold back down, there wasn't any big reason why other than they didn't have maybe the most favorable financials. If we take a look at their financials here, $700 million market cap. I think the financials were negative net income is what was going on. So they were reporting negative net income, and their balance sheet was looking fine, but did decrease in total assets and increased in liabilities a little bit into 2024. So you see their liabilities went up about 400%. So from a financial perspective, they didn't have the best financials. They kind of slipped up into 2024, into 2025 here. And so that was why they started to sell off, really. Then you looked at the offerings they had. They had a partnership with Palantir. They had some a few contracts for their drones, but for the most part, they had a lot of public direct offerings of stock where they were selling their stock, which is fine, but it just means they're going to see, it's good. It shows that they're able to sell, but it also means that they're going to see their stock price probably decline, as that's what normally happens when they do those direct public offerings. Then you got also, not to mention, they had some orders, secured orders in 2025 for drones, but fairly small, about 500K, which pretty small revenues when you look at their market cap of about 700 million. So what we were looking for was essentially just more contracts, better financials. And so as of now, while they're down to this support, it's possible you could see that recovery. I think it's more than likely we could see them maybe have a short-term recovery. It's possible. It's about a 40% swing, which would be huge. But I would imagine they're going to get rejected, sell down even more, and we could see them break this pattern unless something comes out that's a little more groundbreaking on the financial side of things. So we base it on the financials too, because even if it surges, which it could, I wouldn't feel comfortable buying it because it's not really tied to something that's showing that real world value. So that's why I wouldn't see it as a buy right now. So hopefully that makes sense. And Steven says, Schwab gave me 4K to work with. I'm going to go kind of deep with Palantir. If Monday is going to be a big bear day, I'll probably even better Palantir day. Interesting. Yeah. I mean, personally, I think Palantir is very far up there. So I'd see it as less margin for profit, more risk at this moment. However, all power to you, man, if you see that as an opportunity. Aviation tech. So there's some good call outs there. And Moheen says, can you take a look at the LiDAR company LAZR? Yeah, so LAZR, I actually really like their technology. They're working with some good companies on getting their what are they called? The LiDAR scanners that go on top of cars. So Luminar Technologies, they do have this LiDAR tech that goes on top of cars, and they have some partnerships with some big companies. But if I remember correctly, the thing that stopped us from continuing to cover them was the financials. They were making revenues 18 to 20 million, but net income was increasingly kind of dropping. And the balance sheet, a lot more liabilities than they have assets. So from a value perspective, they're not operating very good. So it's possible they get it down. So they're kind of holding their total assets while their liabilities kind of shrunk a little bit. It's possible they get that better, but they're a lot higher than their total assets. So I wouldn't touch it personally now. But it's been interesting to watch for sure. It has been interesting to watch. Steven says, aviation tech, HOVRW. Let's take a look. HOVR. I don't know if this is the right one. You say RW at the ends. So I don't know if that's the right one. NVDA. Okay. So he says, we bought a lot of RGTI, so Rigetti, Big Bear AI, IonQ, QUBT, QBTS, NVIDIA for your 3 teenage daughters right after NVIDIA guy brought them down with these words. And you did them. You're doing very well. Hey, that's awesome. Let's go. When you bought them, since you bought them, they've gone up. That's excellent. Brian says, we're made of star poop. Yeah, words of wisdom. RCAT had a lawsuit, and then in April it went down with everything else. Yeah, aside from the offering, but also the lawsuit, the financials still weren't making sense, right? So that was part of the reason. Quinn says, can you tell me your opinion on GRYP? We shall see. GYRP. GYRP for Quinn. I don't see it here. Did you type it right? Oh, I typed it wrong. GRYP. Oh, my manipulation. All right, we'll give it a shot. GRYP. Is this like 5 million market cap? Okay, $95 million market cap, 3 employees, negative net income, 20 million a year. Balance sheet decreasing year over year. I wouldn't touch it, especially if there's not any specific catalyst for why it is you're watching it. But do you see how financials don't make sense, and then you see this spike here? Oh, I wouldn't put this in my watch list. So hopefully that answers your question. And I do appreciate it, though. Thank you, Quinn, for bringing it up. Hopefully that makes sense why I wouldn't cover it. If you have any questions, let me know. Someone made millions with BMNR? You're asking me. Bitcoin Long says stock QUBT chips AI, quantum computing, and integrated photonics company. They have partnerships with Google, SpaceX, and NASA. I don't think so. But we could take a look. This is QUBT. Yeah, whom they work with, NASA. But when you look at their investor relations, this is the problem. They have a lot of 3D generated stuff. A lot of 3D generated stuff, which is fine. But it's not really showing the real world usage. When you look at the company, They have a lot of things they're doing, a lot of things, and not a ton of employees. 46 employees with a market cap of 3 billion. Doesn't really make sense, right? Quarterly negative net incomes, pushed positive with revenue. They might have got some money on the balance sheet. They're getting cash for their balance sheet. It's building. The best part about it is their balance sheet. There's been nothing else that I've found, but by all means, shoot me what it is that you find, because every time I look, I never find any catalysts. Then people tell me these things like SpaceX, working with them and everything else, and I say, send me the article, and they don't send me the article. And that's fine. You don't have to send me the article if you don't want to. But I just mean like, what source are you finding that information? Because I haven't found that information from the source, and that's where I like to look. So is there a quantum computing awarded contract via NASA? But then you have like Business Insider, and there's no dollar amounts associated with the contract. So that's why I don't cover them and invest in them. If I'm not mistaken, though, they have a lot of manipulation, don't they? Yeah, I mean, look at it. You see all these pumps and dumps? Notoriously been pumped and dumped. Unless I'm missing something. Someone tell me what it is that is the reason why everybody says to follow it. I understand it's up right now, but is that something you want to invest in? Do you want to buy here and lose it 90% of your money? Sorry. Of course you don't. Of course you don't. Why would you? Right? Steven says, somehow ended up with warrants, but I'm messing with it 1 cent. It's at 28. There you go. Blackfold Chrome says, at the of the section, can you talk about silver pricing as SLV holding? As far as like copper goes, I could talk about that. I could talk about some other metals, but as far as silver goes, I'm actually not too sure. I wish I had more information on where the state of silver is right now. I have to look at what's been discovered, where silver's being sourced, how much of it's being sourced, where it's being used in tech right now. I'd have to do a little more research. So I can't give you a very good, I mean, I could, I guess, let's see. What kind of sourcing is happening? Mexico, China, Peru, Chile, Bolivia. Demand. Total supply. Looks like supply is going up slightly, or holding pretty steady actually. Demand slightly down. Market balance pretty consistent. There's not anything in silver that currently would really rock my world. I think with copper, things look a lot more bullish right now. I know semiconductors utilize them big time. Electronics too, but I'd have to look a little bit deeper. I'd have to look a little bit deeper. Recently, there's been a lot of there's been a lot of developments in like battery tech, and also different ways that they make semiconductors. Some semiconductors even using glass substrates, which could potentially like drive down, like silicone and glass as an alternative, could potentially drive down the need for some of the main minerals used for semiconductors. And that was something that was on my mind. So, but then there's also some other things to look at. Anyway, I wish I could talk about it more excitedly, but honestly, I don't have enough information to give you, like, I don't know. Well, on silver, yeah, I mean, Bitcoin just passed silver in market cap. I could talk about Bitcoin a little more probably. Jets said quantum won't happen, then felt bad. He was being honest the first time. He just didn't want to do something to hurt other people's dreams. You like this channel, appreciate the honesty, openness to looking things up. You don't have a stupid ego, and it's not annoying. Ah, good. I'm glad it's not annoying. That's funny. Jose says BBAI, BBAI, BBAI. Everybody's saying BBAI. All right. We'll wrap up the video with BBAI. All right, BBAI, guys, let's take a look. This is exciting stuff because BBAI is near all-time highs. We see it surge this past week up to $7.85 at one point. It hit $8 a share. Saw it surge up here to $8.28, and it sold back down to $7.70. So very hyper bull trend for the last month or 2 weeks, really. See it push up into highs and then use the previous highs as that resistance as a support. Classic hyper bull trend. Then you got growth up in that $8.28, and we see it sell back down. Now, I would imagine corrections would be imminent. Be ready for it. You could absolutely see a big correction on BBAI. Could it continue? It could continue as well. The most important thing is to have a plan. What we know about them is that they have a lot of reasons why they would continue to grow in the long term, but the short term, they've just built a lot of reasons why they might sell off, meaning they've shot up exponentially about 80%, and it would make sense for a correction. The long term, though, they have built more confidence. What have they built in confidence in the long term? Definitely going to be related to their new CEO, Kevin McAleenan, who was previously acting Secretary of Department of Homeland Security, was able to help them secure a lot more contracts with port of entries. So he was Commissioner of U.S. Customs and Border Protection. What we saw was the VeriScan get deployed into tons of new airports, not just airports, ports of entry. We're talking about even where people come in through the ocean and what have you. And as we were checking out some of their recent news, we saw that they did, in fact, verify the different airports and what have you where they were getting deployed. So really good indication. That was part of what really sent their stock up, I believe, the past week, was that verification of all the airports they're going into. We don't have contract values on each airport, but we could imagine that we could see some big impacts in the financials positively for JFK, Los Angeles, Port of Seattle. You got Montreal, Vancouver, Dallas, Chicago. It would make sense that they would generate more revenues. So did I get the insider benefit? It's possible. I did get to see them before any of these announcements came out about these airports, but that was your insight as well. Did you know there was a lot of comments here on YouTube where people are saying, hey, I just saw the technology in SFO. I just saw it over here in LA. I just saw it. And we were like stacking all this information from everybody in the world, getting to see the real world usage early. And that was a really cool thing that allowed us to get that insight. Now, and I talk about it a lot, like it's just like in StockMate, for example. Yes, I could share with you guys information, the upcoming earnings and which companies their targets are in StockMate, the Monday, Tuesday, Wednesday, all that. But what is the most valuable a lot of times is going to be the insights from members inside of StockMate, people that are in StockMate, that do the research, that share the insights that a lot of us don't find. And so the same thing is true with Big Bear in its recent surge here. We were able to find that information early. And so Not only did we see the Veriscan really catch on there, we also got to see the institutional holdings increase. So in this last quarter, we saw increased institutional positions of 177, with decreased just at 49. And then you got Vanguard and BlackRock leading the way, and that's what surged them. So let's take a look at near term. Near term, we're kind of looking at potential pull down to that $7 range. When you look at the levels, it looks like if we're going to make the surge up to previous highs, this is what we saw last time. We saw this big surge up to, $8.65, 127%. And then what happened? Well, shortly after that, in a little bit of a correction, 21% sell-off there on BBAI. Same thing's true, and it used that previous resistance as a support. So oftentimes it will use that previous resistance as a support as long as the trend is continuing. And so what I would say is get ready for those types of moves, those corrections to kick in. But also if you're long, excellent, manage the risk accordingly. We like to do that 1 to 2% for every 10% that we're going for. And then when it comes to the shorter term, that's how we do it. When you're looking for those opportunities for the long term, essentially, it's a long-term play. If they continue to build into the market cap of, let's say, they do get up into those levels of those $5 billion to $10 billion market cap, which we kind of have anticipated, would really put them, meaning improved financials, the balance sheet not having as much debt, which they did pay down, which put them more favorable. And then those things in tandem with the increase in contracts, if we see that $5 billion, $10 billion market cap, obviously at that point, they're a $20 to $40 stock. So there's that potential long term. And I think that that's something we could see as long as they keep up the present progress that they continue to demonstrate. So what we'll watch here is when it sells off. If it sells off at market open, we potentially would trade it. Just because it's in a hyper bull trend doesn't mean we won't trade it bullish, because some of these swings are 20%. So we will be watching those moves at market open on Monday for sure. But why do we watch it now with that potential sell down? Is just because of the run that it's recently made. It would make sense we see a sell down. But really, the next target for it is that $8.60, $8.70 range. And that's kind of what we're looking for there on BBAI. So really been awesome to be here live with you guys. Jose's been here saying like, hey, Jose, I appreciate you tuning in, man. Thanks so much. Rigetti, I just did a video on Rigetti on Friday. If you want to go grab it, it's on the channel. You could go to the live. You could go to, or I could actually send it to you in the chat. One moment. I did a full breakdown there, and I'll shoot it to you so you have the link. Sorry, not Friday, Thursday, which I wouldn't have any new information for you in this video as they have no new releases, and it was the last day of market that was open. So you get the full analysis there. I just dropped it in the live chat for you. Cool. Brian says, it would be wild if it reaches there. Yeah, it would be. Yeah, you have to have more of a plan. Marty says, I've noticed you have to adjust the plans for small caps. 100%. When you're in the shorter term trades, it means more to have a plan. You got to have it in place. And Mark, appreciate you tuning in. Thanks so much for being here. Michael Curry, I'll have to take that one. I'll write it down here. And QUBT, we already did. Marcus, we just did an analysis of that earlier in the video. The general consensus was that the value they were providing was not congruent with their valuation, and that their current financials were not favorable for them to experience growth. So that was the general consensus there. Awesome, guys. Yeah, I'm going to write this down, some of these tickers you guys got here, so we can make sure that we got it for next time. And I hope you have a great rest of your Saturday, guys. Thanks so much for tuning in. And again, if you guys want to join us in our live session on Monday, we go live and you get a link in the morning, and you also get targets. We have some, I think earnings should be heating up this week. We'll get some new earnings targets for this next week. It's possible that highly anticipated tag will be back, which is cool because the last earnings have been kind of quiet. But if you want to join us in StockMate there, get access to the potential of every single day tuning in daily live trading, as well as surrounding yourself with other investors. It's the second link in the description down below. Would love to see you there. We do have a sale for lifetime access that's going away. So if you want to be a part of it, you can get access. However, it's right now it's ongoing. So you get daily live sessions. But one thing to consider is that will be going away. So if you don't want to pay a subscription, then I would encourage you to simply take a look, because that's our 4th of July extended sale. If you want to take a look there, it's the second link below for StockMates. Cool, guys. Marty says, by the way, how do you hit the like button? There you go, Marty. Marty, how do you hit the like button? There's this button that's right by the video. It's a like button. And there's also an unlike button, but you want to hit the like button, click that. And then if I earned it, that's the keyword, right? If I earned it, hit the like button. Do consider subscribing, and I'll see you guys in the next video. Thanks so much for